Hello, my name is Julie Ramsey and welcome to Group Health Insurance. Some key points of this session is that only group members are covered. There's one master contract and the benefits are the same for all group members. The group as a whole is evaluated. There is no individual underwriting. Coverage stops when the insured leaves the group and only off-the-job accidents are covered. Let's get into the details. It covers many people under one policy. Now, they must be members of the group, and they simply sign up for benefits. The group sponsor is the master policy owner, and they get the master contract. Typically, that is through an employer. Now, the members get a certificate of insurance, or it's also known as a certificate of coverage. You've probably seen this. This is a little health insurance card that states your coverage. It lists coverage, your benefit amounts, who's covered, and possibly the beneficiary. Now, I want to know the difference between experience rating and community rating. They sound a lot alike, but there are some differences. Experience rating. The insurance company actually uses experience rating more often, but it's based on previous claims of our group. What is our experience? So if we have employees who've been to the doctor and the hospital and our experience has been high, we use the plan often, then they could increase premiums due to our experience in our group. With community rating, it looks at the same rate, but for all subscribers within that community, everyone that insurance company insures. So if we have a group in that community that they are insuring that has experienced some high claims, then that can affect everyone, and that's community rating. Types of eligible groups. You can't form a group just to buy insurance. It has to be a natural group. So some examples of eligible groups would be through your employer, or a MET, a MEWA, an association, a union, or creditor or debtor groups. Some group policy provisions will describe who is eligible, when are they eligible, how much insurance can you get, and the responsibilities of the master policy owner. Let's go through these. Who is eligible? Well, the requirements are set by the employer, and they cannot discriminate. We can't say, well, if you work in this department, you can't get it. We have to make it fair for everyone. They can exclude workers that maybe work part-time or under so many hours. Now, when are you eligible? Well, the employer will set up possibly a probationary period where you have to wait to sign up for benefits, usually 3 to 6 months. After that waiting time frame, then you can enroll. That's known as the enrollment period. There's no medical exam, and if you sign up during that period, there is no underwriting. However, if you don't sign up during that initial enrollment period and you want it later on, then you'd have to go through underwriting and prove your health. Now, outside of this initial enrollment period, there's open enrollment period. This happens usually every fall, around October or November, and you can make changes to the plan for any reason. So you could say, well, I'm on a high deductible plan, and next year I think I'm going to have some medical expenses, so I want to go down to a lower deductible. You can do that. They won't ask any questions why. There's no medical underwriting. Now, outside of open enrollment in the fall, there's only specific reasons as to why you could make changes. That's known as change of status, like marriage, divorce, birth, death, adoption. Conversion privilege. The insured can convert group coverage to individual coverage without evidence of insurability. And a new individual policy is what they'll get, less benefits, and it's more restrictive. It's only available if you were terminated from your job, or if you're ineligible for coverage. Maybe the insurance company has stopped insuring that class, that similar group of people, and you're within that class. Or maybe if the insured's dependent child is too old. The insured has 31 days to convert. Now let's talk about dependents. You can cover dependents in group health insurance. So that would be your spouse, your children can stay on the plan up through a certain age. If you have a special needs child, that child can stay on that policy as long as needed. What is coordination of benefits? I'm sure you've heard of that term. This is where the insured is covered by more than one group plan, and this is designed to prevent overinsurance. Keep in mind, coverage provided by my employer pays primary, pays first. Let's go through an example. Let's say that we have Joe and Jane Worker, all right? Now, Joe and Jane plan on having babies, and Jane has coverage through her employer, and then she's also listed as a dependent under Joe, her husband's group plan. Well, who pays first then when they have their first child? Well, Jane's employer, that group plan would pay primary, and then whatever they don't pay would go to Joe's employer, and that group plan would pay secondary, all right? So it only pays the expenses not covered by Jane's plan. So don't think they can send the bill to both companies and they can profit. That's not how it works. Now with dependent children, after Joe and Jane have these babies, Joe and Jane each have their own coverage with their own employer. Well, what happens then with the kids, Because now the kids have more than one coverage. Well, as crazy as it sounds, the primary coverage is provided by the parent whose birthday falls earlier in the year. No, it's not who's older, it's who has a party first. So let's say that Joe's birthday is February 1st and Jane's birthday is December 1st. Who pays first? Who pays primary? Joe. Why? Because he has a party first. Now, if the parents are separated or divorced, the plan of the parent with custody is primary. Of course, this is barring any other legal arrangements. HIPA. HIPA ensures the portability of group insurance when changing jobs to a new employer's plan. There are no pre-existing conditions if I had continuous coverage for the last 12 months. Or at least I had it within the last 63 days, I had coverage for the last year. So from that ex-employer, I will get a certificate of prior creditable coverage that states I had at least 12 months of coverage. Then when I go enroll in that new plan with that new employer, nothing can be denied as a pre-existing condition. Now, if I had no creditable coverage, I went without insurance for a long time. If I didn't have that creditable coverage, there's a 12-month pre-existing exclusion, okay, for conditions that are seen in the previous 6 months. So that means when I go sign up for that plan with that new employer, anything I went to the doctor for 6 months before I sign up in the plan, if I go again for that same condition, can be excluded for up to 12 months. In that new group plan. Continuation of benefits, or COBRA. You must offer COBRA to your employees if you have 20 or more employees. What is COBRA? Well, it's a continuation of benefits under group health insurance, not group anything else. We're talking about group health insurance. Sometimes people are confused. Well, what is COBRA? It's the same group coverage. However, it's more expensive. The ex-employer is not paying their share. Why? You don't work for them anymore. Qualifying events. When would I be eligible for COBRA? Well, the employee quits, or they get fired, or there's a divorce, or the child is too old. However, there is one exception: gross misconduct. If you steal money from your employer, you embezzle money, they're probably not going to ask, would you like to continue on with our group plan? Notification. They have to tell you about COBRA, and it will be within 14 days of the qualifying event. So here you go, here's your information on COBRA. Once you receive that paperwork, then you have a decision to make. Gosh, should I go on COBRA or not? You have 60 days to decide. Assuming you go on COBRA, then you can stay on COBRA, but it is for a limited time frame. You'll pay 102% of the actual group rate. Now, that extra 2% is that admin charge because you don't work for that employer anymore, so they don't have your paycheck where they can deduct this from. So that's basically that bill because that human resource rep has to send you a bill and then you pay them, and then your ex-employer takes one great big check to pay to the health insurance company. You can stay on COBRA for up to 18 months. However, you can stay on COBRA for 36 months if you are a dependent due to death, divorce, or the child is too old. To recap group health insurance, only group members are covered. You have to be a part of that group. You can't form a group just to buy insurance. There's one master contract, right? The employer is the master policy owner, and the insureds are the employees in the group. They have a certificate of coverage. The benefits, they're the same for all group members. The group as a whole is evaluated. There's no individual underwriting. Coverage stops when the insured leaves the group, and only off-the-job accidents are covered. Thanks for joining me today in Group Health Insurance.